What's up, folks? This is Crypto with James, talking to you today about the crypto and history. The history of everything we've seen with crypto and Bitcoin. I want to actually go through, and there's a great article that I want to look at, and it's fundamentally looking at the ebbs and flows of the bear cycle and the bull cycle, if you're unfamiliar with those terms. Bear cycle is when the market's dying and dropping. Bull cycle is when the markets are rallying and prices are getting bigger and bigger and bigger. Just because if you're new to crypto, you're going to want to know what you're getting into. Before I get into that, though, these guys are the first 26 coins I spoke about on the channel. These were the prices of recording, current prices. If you had invested $100 into each one of them, when I released videos about them and you were still holding them all, you'd be in profit for 12.3K from 2.6K investment. If, however, you just sold those coins during the bull cycle, when everything was up, you'd been in profit for 123K from 2.6K investment. Absolutely crazy. And the bear cycle, when everything is down, it is the best time to invest. It's also the scariest. But biggest gainers were bear cycle ones. All of these were bear cycle. And you'll notice Phantom at the top, 677 times gain. So if you'd put $1,000 in, you would have been able to buy a very nice house. I did a whole course saying this was going to be the best investment of the year. And if you want to see the coins I'm getting in on now, the ones I think are going to be absolute titans in the next bull cycle, then when everything is up, then come check out Copy My Cryptos, where I share everything I'm doing. And if you guys want to make and match my profits, then come check it out. The link's in the description. Everything on the site is verifiable. It's all on my YouTube channel, so you can check it out. And if you like it, come join me and I'll see you there. So, this is an article on Medium. It's by Mosaic Network. It was their blog, and shout out to the two authors. So, this is a brief history of Bitcoin bear markets. So, they broke down cryptocurrencies into different bear market periods for their analysis. So, bear market is traditionally defined as a 20% drop in price lasting for at least 2 months. Though through this definition, we discovered 4 major bear market periods over the course of Bitcoin's life, excluding the prolonged bear market of 2018 onwards. So bear market 1 lasted from January 11th, 2012 to July 11th, 2012. And the decline was around 40%. This was the first major bear market of Bitcoin. And what we see is TradeHill, which was the second largest Bitcoin exchange, shut down due to regulatory problems and a loss of over $100,000. We also saw in March 2012 a Linode hack, which was resulted in 46,000 Bitcoin being stolen. We also saw FBI report on Bitcoin leaked, which raised concerns about the potential of Bitcoin facilitating illegal transactions for weapons and narcotics. And then we also saw Bitcoinica hacked, which resulted in over 18,000 Bitcoin lost. So as you can see, in that first year, 64,000 Bitcoin just stolen. And these had obviously massive impacts. TradeHill was the second largest exchange, so that shutting down caused huge problems. And as you can see, that bear market lasted 185 days. The next one was from August 7th, 2012 to December 6th, 2012. So that lasted 111 days. The peak price was $13.35. The bear market low was $8.40. And imagine in Bitcoin at $8. And there was a drawdown of around 37%. And what we saw were a few big things that happened. So there was a complaint filed against Bitcoinica. We saw Bitcoin Savings and Trust in default for running a Ponzi scheme. And we saw Bitfloor, the 4th largest US Bitcoin exchange, hacked for 24,000 Bitcoin. So again, in that first year, we saw a lot of Bitcoin disappearing. In fact, in total, 88,000 Bitcoin stolen. Then, bear market 3 lasted 415 days, over a year, right? and it was referred to as crypto winter. The peak price was $1,149. It hit a bear market low and a drawdown of 83%, and it dropped to $197. And this was down to some serious stuff that happened with regards to Silk Road. So in October 2013, Silk Road was officially shut down by the FBI. Silk Road was an online black market where people were, and it's often referred to as the first modern darknet market. People could buy drugs and everything with the Bitcoin. And we saw effectively that them shutting that down was massive, because Silk Road's significance in the history of Bitcoin was that it represented the crypto asset's first form of widespread user adoption. Yes, it was for buying drugs and stuff, but still. And although Silk Road ceased activity in October of that year, the price of Bitcoin continued to rally until the end of November. We also saw Bitcoin's price hit $1,000 after doubling in 7 days. And we're starting to see news articles about it for the first time. Bitcoin could reach $98,500, said a Wall Street analyst. So we're starting to see articles coming out. But the decline began when some significant events happened. Silk Road was seized. 96,000 Bitcoin was stolen from Sheep Marketplace. China's central bank barred financial institutions from handling Bitcoin transactions. BitInstant CEO Charlie Shrem was charged with money laundering. And Mt. Gox halted trading, eventually filing for bankruptcy, amid allegations of 850,000 Bitcoins missing and likely to be stolen. Again, that real massive moment. So the point is while it's challenging to sort of predict what drives price movements, it's clear that Bitcoin is highly influenced by specific events and narratives that are both positive and negative. And then, if we actually look at what happened in 2018, there were a lot of events. And I'll grab that up now. So again, I want to look at some of the things that happened in 2018, right? So we saw in January of 2018, an article by CBS cautioned about possible fraud, citing the case of BitConnect, which was a British company which received a cease and desist order from the Texas State Securities Board. Bitcoin had promised very high monthly returns, but hadn't registered with state regulators or given their office address. And that entire capitulation of BitConnect was enormous. That ended up being one of the biggest Ponzi schemes ever. It was billions of dollars at the time. And the timeline of the crash is pretty straightforward. Look, you saw Bitcoin reach a new all-time high in December. Then, in December, it began falling, and it fell about 45% from its peak. Then there were rumors that South Korea could be preparing to ban trading in cryptocurrency, so the price of Bitcoin depreciated by another 12%. Then we saw CoinCheck, which was Japan's largest cryptocurrency over-the-counter market, hacked. They were hacked by $530 million of the NEM that was stolen by the hacker, and the loss was the largest ever by an incident of theft. And CoinCheck obviously indefinitely suspended trading. We then saw in March as well compromised Binance API keys that were used to execute irregular trades. Then later on, in the March of 2018, Facebook, Google, and Twitter doubled down on being against ICOs, the initial coin offerings. And then by November, Bitcoin's market cap fell 100 billion for the first time. Fell below, 100 billion for the first time. And the price of Bitcoin fell to 5.5K. And this is what I mean, like, what we end up seeing is all of a sudden incidents trigger things to happen. Like, Bitcoin and cryptocurrencies overall are very susceptible to these massive, massive moments. And look at what's been happening now. 3 Arrows capitulation, Celsius, Voyager. And they have happened to coincide with the market on a decline. But in the past year, we've seen China, or year and a half, we saw China completely outright banning crypto. banning crypto mining. That started moving over to America while we were seeing huge institutions starting to look at crypto seriously. Still, these moments, these external factors held a huge impact. And when you bear in mind, Bitcoin peaked in December of 2017, and it took 3 years, effectively, to get back to its high. Bear cycles can last a goddamn long time. Something to be aware of, because fundamentally, this is a cyclical market right now, and there's been lots of conversations about, look, are we going to stay in the bear and bull cycle? Are we going to keep being in that? And at the moment, the 4-year cycle seems to be holding that principle of the 4-year cycle still seems to be holding a lot of weight. So just off of that, look at the high from when Bitcoin, the high that Bitcoin reached, and when it reached, I think it was November last year. So if we're saying a 3-year time frame, and that still means 2024, November 2024, possibly before Bitcoin exceeds its previous high, or gets back to its previous high. It's interesting. Well, it's going to be a very, very interesting run, but we might have a 3-year run of that. But that's not bad, because that's 3 years to accumulate and strengthen your positions. And if you've not got tons of capital, you can start dollar cost averaging in. Because if it is a 3-year bear cycle, fantastic. Fantastic. Because how many cryptos can you buy up, and how many positions can you strengthen across by November 2024? Crazy. And that's it from me. I just wanted to actually run through, because people don't, I found it interesting. It was interesting for me. Let me know if it was interesting for you guys. And if you want to see the cryptos I'm buying up in the bear cycle, the ones I think are going to have the massive gains in the following bull cycle, when Bitcoin finally breaks its previous high and market's on fire, then come check out Copy My Crypto. The link's in the description. You can see everything I own, everything. And if you want to match my profits, you can, because you can match my trades. But I'm going to be positioning myself over the throughout this bear cycle. And I cannot wait, because bear cycles are highly, highly, highly profitable. And that's it from me, guys. Take it easy. Bye-bye.